Okay, good morning, everybody. Good evening, good afternoon. Can everyone hear me and see my screen? Yeah? Good, good, good. How's everyone doing? Got a nice little chilly weather here today in Montreal. Where's everyone from? Anyone new actually here? Anyone new? Okay. Couple cold in London. Okay. Slovakia, Madrid, Dubai. Okay, good trading day, up about 200 pips. It's not the pips that matters, it's what's the risk. Okay, I'm from El Salvador, Central America, Jamaica, from Malaysia. Okay, okay, good, good. Washington. All right, all right. So we got a pretty from what I see, pretty full house here. More people coming in as we speak. So expect some questions in the middle of the session. Today we're going to be discussing strictly support and resistance. Excuse the noise in the background. There's construction outside my villa here. But I think I'll get someone to get rid of that noise. But yeah, we're going to be discussing support and resistance today. And how many of you guys actually know how to use support and resistance properly? So let's play a little game here, shall we? Let's see what's the level of support and resistance that we know. Okay, so I'm going to clear out this chart so there's nothing here. Okay, so now here's a simple question to you guys. Is this support? Or, okay, so this is A, and or is this support? That's B. Which one is correct? The orange or the purple? Okay, we're seeing a lot of people saying both. Some people saying A, some people saying B, but a majority is coming in for both. Okay. Now, support and resistance can mean various things. Now, a trend line is a excuse me. Does a trend line act like support and resistance? Okay, so if I go like this, is that my trend line? Or, so that's A, or is this my trend line and that's B? Okay, this is good. This is good. This is the reason why we're having this webinar, right? Because there's a mass confusion out there on the very pure basics of what is support and resistance. Okay, so what is the clear answer? Now, how many of you guys said A? Okay, there are several people who said A. And then there's several people who said B. Here's the thing. People who chose A, we chose it this way because it makes the most logical sense. Correct? Like it's touching, it contains all the information and stuff like that. However, let me ask you a straightforward question now. If the market was right here, would you have not connected that second piece right there? Right? So why see you see the second piece here? Like we're missing probably a few pips in there to connect it. So the angle is out of proportion. So my question to is why when we look at the charts we draw it in a different way, but when it's live we connect it properly. So when doing support equals resistance or trend lines, you must not skip data, which is like that. Now, it might look like, hey, but what about this piece here that pokes out? Well, that's exactly as it sounds. It pokes out. Okay, so here's something I want to show you guys. Here's a range. All right, everyone agree? This is a design of a range? Okay. Okay, is this a range? Yeah, is anyone not agree that it's not a range? Okay, everyone says yes, it's a range. Okay, so this one, we're all on the same page. Now, if the market does this, are we out of the range? Okay, those who says no or a bit or not yet. Okay, Scott Bradley, not until it makes a higher low. Good. At that moment, yes, that's also correct. Only with the close if it closes outside. But if it closes outside, for example, if it closes outside, now, and then it does this. So, yeah. So would I do this? Would I say this is a range, or would I suddenly change my trend line to do this? So which is the answer? Is it back in the range or it's an uptrend? Back in the range. Now, here is the number one problem of most traders. When we do this, like what we just did between all of you guys and me right now, we waited to read the market left to right, as if you're reading a book. If you look at a book, you never understand what it's doing. You must read the book to know what's the story. Does everyone agree? Just staring at a book won't tell you anything. You have to read the book. And just like a book, you read it left to right, piece by piece. And then you know, oh, it's not a higher high, it's back in the range. Okay? Something so simple, yet so complex. Okay, shall we continue? Everyone understand what I'm trying to explain here? Okay, let's move forward. Let's move forward. So, now, similar concept. Let me get a rectangle out. When you see something like this, okay, nice little up move like that. Okay, markets are going up, let's say like this, and then it goes up to this candle. It goes up really high, and then the next candle comes down, and it's red. What does that mean? Okay, Jason Smith, RR. Okay, that's railroad, I'm guessing. Bears in control, higher prices being rejected, bearish engulfing, lots of pressure down. Okay, so all this terminology, let's get rid of it. I want you to tell me what this means. Abdul Ahmed, very good. Very good. We're gonna discuss that right now. Okay, DZ Bista, price rejection. Marx's price reversed. Okay, so when if I see this thing on a higher time frame, what does it look like? A pin bar, exactly. It's gonna look like a candle that looks like this, right? Because the data of going up and going down is going to be contained within a single bar like that. It's a pin bar. So keeping that in mind, when the market goes above um, a range and comes back in, we can see a close outside. It doesn't mean that if there's a close on the outside that the markets are long. Because if it comes right back inside, all it means is it's just made a candle with a tail, technically. It's price rejection, railroad tracks, and all those 50 other terminologies you guys gave me. Yeah? Makes sense? So forget the wording and focus more on what it means rather than, what's the word for it. Okay? So exact same concept here. When I draw my trend line here, the market's coming down. It connects to the second piece. But the third time, when it pokes out and pokes down, is that trend line still holding? Absolutely. But if I go down to a lower time frame, let's take a look at that poke out on a lower time frame. Oh. The candle's closed outside of it. Does that mean it's an uptrend? It's going out. We're switching to the long bias. No. We have to allow it that momentum that it can go out and come back in. Right? So we're always taught that in support equals resistance, the moment we have a close outside or the market stays outside, that we have changed directions. And that's the number one myth out there on the internet right now. You go to any forum, any website, and you ask them a simple question. A guy who's making 1,000 pips a month, you ask him how to do support and resistance, he'll tell you, I don't know. Or he'll give you some nonsense stuff that what most people say out there, right? That, support and resistance means wherever a level's holding, obviously. It's common sense. No, it's not common sense. So I need you guys to focus on this information, that how support and resistance is really drawn. And trend lines are a way of support and resistance. So far, so good? Everyone with me? Yeah? Good. Any questions so far? Okay, good. Yeah, if there's any questions, please type it in the main chat room and not in the question area, so everyone can see the question. All right, so let me go back to the regular chart that we were on, okay? Whether it's daily or 4 hour, whatever your time frame may be. So let's take a look. Okay. Now, what time frame is best for drawing trend lines? Well, if I didn't show you this up here, the daily or the 4 hour or the 1 hour, can you still draw trend lines? Yeah, absolutely. See, anything that we draw has to do with something on a chart, and that can be on any time frame. Now, if you're asking the stability of things, well, the stability of trading in general is in a higher time frame. Think about it. Think logically. Now, why is there more stability on a higher time frame? More data, the big picture, less noise, more info on history, more time incorporated, gives overall movement. Okay, so you see there's random, like many answers to this, right? So let's discuss this. So why is a higher time frame well, there we go. One of them, there's an answer right there. It's more stable, higher volume. Okay, so let me ask you guys a basic question. What is more powerful? 1 million people with $10 each, or 100 people with $10,000 each? Okay, so there's a little confusion here. Let me change the numbers around. 90% of the world's population trading with an average of 10,000 US dollars, and 10% of the world's population trading with $1 billion. Who has the upper hand? It's always the big players. Always the big players. Now, having that said, the big player concept, okay? The big player concept. Now think about it this way. If I tell you now, let's say everyone in this room has $1,000 account, right? $1,000 account, and I tell you, okay, you know what? We got to buy Euro USD, and let's buy it for one mini lot. How many of you guys would say, okay, I can take that? How many of you guys will be like, okay, I can take that? If I say Euro USD looks good, you guys all agree, and we all try to take it for one mini lot or one micro lot, let's say. Right? All of us would be like, yeah, sure, why not? Let's do it. It'll be quick and prompt. No one will take an extended period of time to really think about it. Raise that money to 10,000. Okay. Now there's a little bit of stress when I say pull the trigger. It's like, wait, let me check. Raise the money to 100,000. You will slow down even more. Raise the money to $1 billion. You will not trade a 30-minute time frame, a 15-minute time frame. You can't unload and load that quickly. There is not much time for analysis to turn that kind of money. Does the logic make sense to you guys? This is why the higher time frame has the bigger guys, not because they choose the higher time frame, because there is no other choice. Because if you're in a bank and the bank, as a banker, you have, let's say, $20 million allocated to you for you to pull the trigger. Now you see a trade and you have a $20 million trade you want to take. You're not going to get that, okay, click it buy and it's a buy just because you feel like it. You got to get that paperwork ready. You need to take it to your manager. He's got to sign off on it. He's going to take it to his manager. He's going to sign off on it. And then you can pull the trigger for $20 million. That doesn't happen in a matter of minutes. That's why, and the higher time frame is where the big players sit. Okay? That's why the higher time frame is more organized and a little bit more predictable because things happen in an order. So now let me ask the same question that one of you guys asked earlier. So what time frame is a trend line more reliable? A higher time frame. Yeah. What time frame is any technical analysis reliable? Higher time frame. Okay. So keep that general concept in mind. It's not about A plus B always has to equal to C. No, it all depends on where the money is to help that trade get pushed. Okay. Just because a line is connected, let's say I connect it to here, just because it touches this line, it has to sell. Right? So we need to get away from that concept of, just because I drew that line and it looks perfect, that things better sell. And if it doesn't sell, okay, well, probably the news or it's probably the market, we'll blame it on somebody. Okay, what you regard a higher time frame, only 4 hour and daily. Yeah, Jen, Sora, I personally think a higher time frame is 4 hours and above. Okay. Weekly is also a good time frame, but it's just not for me. It takes too long for a trade to come by. So I generally, hover around 4 hours and daily. Pick out a trade on average, 1 per day, or 3 a week or 4 a week, something like that on average. So how do you know if a breakout is false? Oh, well, how would you know? let's answer that question. How would you know a breakout is false? Okay, let's say the market goes up and then the market goes higher and closes above. Okay, so let's watch this. How do we know that the market whether it's gonna be a fake or not? If it bounces off the top of the range and makes new highs, then breakout. Very good. Very good. If it comes back down, it always has to come back. Obviously, let me ask you guys this question. When the markets are going up, then they pull back, then they go up. How many of you guys buy here? Is that logical to buy right there? No. Right? What do we need? A pullback, right? It's like you go to a store, let's say you like an iPad and the iPad is $500. You're like, ah, man, it was just $300 a few days ago. Let it come down a little bit and then I'll buy it. Or are you going to be like, well, it's $500. Let me just buy it at the maximum price. Let me wait till it's $550 and then I'll buy it. No, no one does that. Same concept of when the price closes outside a range, no one needs to buy up there regardless. You need a pullback. Now, that pullback is determined if it comes in or if it holds above. If it holds above, by all means, your buy is real because it's not a faker. But if it just crashes right back inside, well, switch. Make sense? Simple and straightforward? Okay. Sometimes it goes all the way. Okay, let's say it goes all the way. You mean like that, right? So what do we do in a scenario like this if it goes all the way down? Okay, so here's one scenario. It goes all the way down. The other scenario is it goes all the way up. So what do we do? If it goes all the way up, should I buy it here now? If it goes all the way down, should I sell it here now? No. It just basically means you can't do anything. It doesn't mean that, oh my God, I missed it. It means, okay, it's gone. Big deal. It's the Forex market. It's 24 hours. Okay? But you cannot be that buyer that when the price of the iPad is $500, you're like, let me just buy it now because it might become 700. No, no one thinks like that. No one should think like that because in the real world, none of you think like that. In the real world, everyone's like, 500 is out of my budget. When it was 300, I would buy it. Okay, let it at least come down to 400 and I'll see. Okay. In the real world, that's how everyone thinks. But when it comes to the market, for some reason, everyone keeps pulling the trigger over here because they get too excited. Use your same real world experiences in the market and you'll be fine. Okay? Where should you put your stop loss? Okay. So let's say the market comes down. Let me remove. Let's say the market comes down and it holds here and it starts to turn a little bit. Okay, so where should we put our stop loss if we are looking to go long from here? Yeah, below the level it just broke. Just here. Now this is exactly what we're discussing today. Support equals resistance. Support and resistance. We're re-engineering it to explain to you what and how. Okay. Ready? You ready to dive into it? Okay, let's stop all the questions now. Let's jump more deeper into support and resistance now. Okay? All right. So now when we have an area like this, it's like support, 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 again and again and again and again and again. Now, what time frame is this? Daily. Do you think this area of support, the people on the 1 hour notice? Do you think this area of support people on the 4 hour might notice? So if I move my chart to the 4 hours, can I see that area on the bottom? Yeah, they might see it. If I go to the daily people definitely see it, right? If I go to the weekly, do the weekly guys see it as well? So notice the amount of time a support is held makes a difference. The more eyes watching it means there's more orders placed just below. You've heard of breakout traders, right? Oh, I love those guys. You know, they, they really spend money for us. So, but anyways, so if this is your area of support, once it starts piling up, people watching just US dollar CAD start to get bored and they start putting in orders because most traders are trend traders. They're not range traders. How many of you here trade ranges? Yeah, I haven't seen one answer. So no one trades ranges because everyone thinks range is death. They're more attracted to a moving market like this because it's a lot more fun. Don't get me wrong. It's a lot more fun, of course, trading trends. But the market trends what, 30, 40% of the time, and it ranges 60% of the time, 70 maybe. Lately we've been having a lot more trends because the world's going crazy, but that's the statistics of the market ranges most of the time and trends a little bit. All right, so if I go back to my daily, now when we have this support, now how do you think we're going to break out of that support? Yes. When we break out of that support, you need something strong. You need something strong. It doesn't just crawl its way out. Okay, so here's the question one of you guys asked. What if it goes all the way outside, and the pullback just doesn't happen after the close? Let's say it closed here on this candle, then the next candle, then the next candle. 3 candles have passed by. That's 3 business days. Whoever's watching this range will pull the trigger on the first candle usually. Okay, breakout traders. Now, those of you who are patient, you wait for the pullback to happen, you're waiting for the pullback to come, and you're waiting to see, is it going to go back inside? Or will it hold on the underside of this trend? Because that's going to be our support equals resistance. If it holds on the other side, our sell is on. Now, have we come up to this resistance? Let it go through it. Is that right? Was that the question? I don't even know if you're still here. Or sooner. You mean bounce off from earlier? Like here? Is the screen visible for all you guys? Okay. Yeah. Of course it's gonna react sooner, at least one time. Because when you look at this, okay, all of you guys, focus on this. When it came down here, how strong was it? How strong did it come down to here? Okay. Now, when it came down again the second time, how strong was it to here? Stronger, right? Now the word is stronger, which means it's comparing to something, which is the previous move, right? That's why we use the word er at the end, stronger. Okay, now the next move from here to here. Weaker. Good, because that we're comparing it to the previous one. Now the next move. Weaker. Now the next move. Okay? Like Jason says, done. It's crisp, it's finished because we no longer have lower highs anymore. Now we have a new higher high, which means all the sellers are cooked. Now the buyers have begun. Now that the buyers are going up, if he's coming down in full throttle all the way to here, expect him to react from here, but not go all the way down. He might go through it. But in the same scenario, if he goes up, for example, like this, he goes up, then he does a little retrace, then he goes up just a little bit more, then he does a retrace, then he goes up just a little bit more, then he does a retrace, then he goes just a little bit more, retrace. He gets weaker every time, and then he gets up to here, and then he does a full retrace. You should know that this is going to hold because it's not letting the market through. This whole time it's trying and trying, and it's getting weaker and weaker. But if he's coming in with full force, well, it will react, but it's not going to be a sell that you can hold on to. Okay, so let me clear this out right here. All right, so here, similarly, we had our trend line. We connect the first dot from here to the next dot there and extend it out. Okay, like that. Similar concept. Imagine this is a tilted support. You see how strongly the market broke out of it? So now our whole concern is it going to stay outside or not? So when it breaks out of it and it retraces to come back to the other side of the trend line, which is now support. It used to be resistance, now it's become support. When it comes the first time, yeah, of course it's going to react, but we're not interested in that one because it's too strong. He retraces, gets a bit weaker, not interested yet. Then he goes up, comes down again. He doesn't even go below his previous one. We get interested as things slow down. More tails showing up, more signs of smaller candles, and that's when your real buy begins. Does that make sense? Okay. Okay. Yeah, I think I'll also do a webinar on this on Urban Forex this week because it looks like there's a lot of questions on this. We might do another one for next month as well for FX Street, the same one. So, all right. So, similar concept is when you draw your support equals resistance or your trend lines, make sure you connect the dots. Now, am I supposed to connect these two dots here, right here? You see these two dots here? Do I connect those? No. Okay, you don't have to. You only connect stuff once it moves away from the market and comes back to it. That's what you connect. Okay, you don't connect the immediate stuff just next to it. Okay. Similarly here, you see here, I don't need to connect this with this right there. That's not coming back. That's just part of the down move. This is coming back. Make sense? Okay. So similarly, if I were to connect these areas here like this, we've finally broken out of it, right? And we're going to see the same thing. If it holds on the upper side, then this can actually become a nice buy. Now, if we're going to buy it from here, obviously we're aware of the support that used to be here. So it's like, well, if this is my lowest point, this is my highest point, that's a good risk to reward. I want to catch the market as low as possible with my stop losses below, and I want to target to my next area that's going to give me problem. And that's when you have a proper risk to reward ratio, like a 2:1 or a 3:1. But buying it right now, expecting it to hold just to there, is not worth it, because that doesn't give you proper money management. Okay? So it's always better to let the market retrace down as low as you can grab it, and then take it all the way to the top. Okay? So you must always have that space. All right, guys. So pretty much I believe that's it for now. It is now been 10 more minutes. I really hope this was worth it for you guys. Sorry about the disconnection. It happens sometimes. But we will. I'll see you guys next month in FX Street. I will hold another webinar on this on Urban Forex as well. And yeah, I'm not gonna promote anything today. I think today is enough. Next month I'll do a promotion. So thanks a lot, guys. It was great meeting you guys. Thanks for coming. Take care.